Moods of the people change when they look at the investment portfolio valuations. Some people feel very happy, some people feel very sad, some people are confused. In this episode today, I am going to talk to you about what does your portfolio valuation really mean. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, practicing investment consultant and a financial planner. This is an attempt to impart financial literacy. There is no hype here, it's just the right advice.
NRI Money Clinic. No hype, just the right advice.
When you look at your investment portfolios, it will give you a lot of valuations. You invested a certain amount of money, its value is so much today, and based on the current valuation, it will say whether your portfolio is in profits or whether your portfolio is in losses, whether it is standing at where it is in the beginning itself. And your feelings will be different. If you look at your portfolio and feel that it has made a lot of money, does it really means that you have made a lot of money? Or if the valuations are down and it's showing that it is showing you a negative returns, does it really mean that you have lost money? The answer is neither you have made money when your valuations are up, nor your portfolio has lost value when the valuations are down. If this is the thing, what does it really mean? If you look at the valuation of your investment portfolio, the only meaning that you can take from the valuations is this is what I am going to get if I liquidate these assets today. That's all is the meaning of portfolio valuation. It does not mean that you have made profits. It does not mean that you have made losses. If you try to liquidate it today, that is the value you are going to get. Now, if your idea is not to liquidate this assets today, then there is no need for you to feel happy about it. There is no need for you to be feeling sorry about it. If you have invested certain amount of money, let's say in a share or a mutual fund, and your idea is to fund your retirement corpus, which is 10, 15, 20, 30 years later, what happens in your portfolio today has literally no meaning for you. So you don't need to check your portfolio so often and feel happy about it or feel sad about it. Now let us assume that you are viewing your investment portfolio valuation on a Friday evening, and your investment portfolio has shares and mutual funds. You may feel very happy that I am seeing so much of a profit in my investments in these shares and mutual funds. Now, can you go and liquidate that at that point of time? The answer is no, because Friday evenings the markets are closed, Saturday and Sunday the markets are closed. Now when Monday comes, anything can happen in the market. Market may move up, market may come down, it may remain where it is. So the valuations will change on what happens on Monday morning in the markets. Suppose if the markets have crashed on Monday morning, the valuations what you saw on a Friday evening are totally meaningless for you. So the meaning of valuation of your portfolio, it only means that if I sell it now, this is what I am going to get. It does not mean what I am going to get if I sell this tomorrow, a year down the line, 10 years down the line. Now, when will you make the profits or losses in that case? The profits and losses are made only when you sell it. If you sell it today, you book the profits. If you sell it today, you may book the losses. So unless the decision to liquidate your assets are taken, the real profits and losses will not be known. So don't feel too happy if you see profits in your portfolio. Don't feel sad if the portfolios are down. This is the true meaning of portfolio valuation. Now let's assume that your investment portfolio has got bonds in it, and your investment portfolio shows a particular value. Can you depend on it? Yes, if you are able to liquidate that for that particular value today, that valuation has a meaning. But if you wait for tomorrow, anything could happen. For example, now the bonds that you are having have a principal amount which is invested into it. It also has a promised coupon rate which the issuing company will pay at certain points of time. Let's say if the issuing company pays coupons once in 6 months and you are selling this bond from the last time the coupons were paid and before the next 6 months have come, it has an assumed coupon accumulation within this bond. Now, today if you sell it, the market may take this bond at that particular value. If you try to sell it at some point of time in future, the bond valuations can get affected. You have any doubt? Now what happened in the recent case of Vodafone? Many of you would have invested in the debt funds of the mutual funds. Every fund had an exposure to Vodafone. Overnight, you have seen how Franklin Templeton reduced the valuation of these Vodafone's paper to zero. So even when you have invested in a bonds, the portfolio valuation only means this is what you are going to get if you liquidate it today. Tomorrow or some point of time in future, anything could happen. The same story has repeated with IIFL, it has happened with DHFL and countless bonds which were floated in the marketplace in years before. Well, if your investment portfolio has got the bank FDs, and how do we read the valuation of your bank FDs? Now, the bank FDs will have a principal and they have an accumulated interest portion. Even in case of bank fixed deposits, the valuation of your portfolio is an assumption that this is what you are going to get if you liquidate it today. You go to the bank, ask the bank to liquidate your fixed deposits, that's what the money the bank is going to give. Wait for tomorrow or some point of time in future, this assumption may or may not happen. Have a doubt? What happened to the fixed deposits which were kept in PMC Bank? What happened to the fixed deposits kept in several cooperative banks which have gone bust in previous years? So even in case of a bank fixed deposit, here too it means that this is the valuation you are going to get if you liquidate it today. By and large, nothing will go wrong. My purpose here is not to scare you that your FDs can go bust. No, that's not the thing. The whole idea is to give you a realistic perspectives of what does the investment portfolio valuation really mean here. Now let's assume that your investment portfolio has got some alternate investment asset. For example, it could be arts. Let's assume that you have purchased an art piece for 30 lakh rupees and you add this value 30 lakh in your portfolio valuation. Here in this case, there is no guarantee that this art piece can fetch you 30 lakhs in future. Even today, if you try to liquidate this art piece, you may or may not get that particular valuation. It's just an assumption. It's an assumption that you have made. There is no marketplace. There is no set parameters to value this. It purely depends on the willingness of the buyer to pay a certain price for this. You may have a 30 lakh valuation for this art piece today and there could be a buyer for this. But what if this art fashion goes out of fashion in years ahead? Or if it is lost due to a fire or stolen, the valuation can come to zero at no point of time. So if you have added a particular valuation to arts, then it's just an assumption. It may or may not be the truthful valuation that you can count on. Now let's assume that your investment portfolio has got properties in it. It could be land, it could be a flat, it could be commercial or any kind of real estate which is valued inside your investment portfolio. What does the valuation of your real estate portfolio means here? Now here again, you have assumed that the real estate that you are owning is commanding a specific price. You would have assigned this price based on the purchase price that you have paid the money for, or it could be the assumed market value. There is no ready market, there is no ready price discovery mechanism when it comes to your real estate. It's an assumed price. You may assume that this property may fetch me 1 crore of rupee and you can add a valuation. But the real price of this property will depend on the willingness of the buyer to pay that price. Will it get realized that way? I do not think so. In most of the cases, when the properties are sold, they are sold for a much lower valuation than what it is being talked in the marketplace. This is one aspect which you have to keep in mind when it comes to valuing your properties. There are other things to be considered. For example, you may be able to sell this property for 1 crore of rupee, but what is your net realizable value? For example, there can be capital gains taxes, there could be stamp duties, there could be other charges, there could be a lot of other things which you have not taken into account. So, when you put a valuation for your properties, that need not be the realizable value if the property were to be liquidated as on date. In future, anything could happen. If your property is destroyed because of an earthquake, you may not have that property at all. Or if your property is acquired by government for some road project or something else, its valuation could change upward or downward. Anything can happen in future years. So dear viewers, next time when you look at your investment portfolio valuation, there is no need for you to be very euphoric if you see great profits which have been made there. There is no need for you to be feeling sad if the valuations are showing lower at that point of time. Once you have these things in your mind, you will become more intelligent investor going forward from here. Thank you very much for watching this episode on NRI Money Clinic. If you like the topic that I have discussed today, please like this video, share it with your friends and relatives. If you are watching this program for the first time or you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Thank you very much for watching this episode on NRI Money Clinic. We'll be back with you very soon with one another video.
Press the bell icon for more details and subscribe our channel.